Hello and welcome to DigFin VOX, Voices in Digital Finance. I'm your host, Jame DiBiasio. If you enjoy the program, give us a like, share, subscribe. My guest today is Alessio Quaglini, co-founder and CEO of Hex Trust, a third-party independent digital asset custodian. We spoke about the growing connections between TradFi and crypto, what regulators are getting right and wrong, and how Alessio sees Hex Trust expanding into new businesses. Alessio Quaglini, welcome to DigFin VOX.
Hi, Jane.
Great to see you. You are co-founder and CEO of Hex Trust, which provides third-party digital asset custody, among other services. So I want to talk to you about the custody side of this business, where things are going. 2024 has been a pretty big year for people in the digital asset or crypto space, but still a lot to be worked out. So I'd like to maybe just get a sense of, for people who may not understand all the differences between what, say, third-party custody does versus, say, self-custody or what an exchange provides. Why don't you walk us real quick through the basics here so we are on the same page, and then we'll get into some of the details.
All right, sure. Right. So first of all, custody is nothing new, right? Custody is an activity that is very traditional in the traditional finance space, right? There's only a couple big differences between what happens in the blockchain world versus what used to happen in the traditional financial world. First of all, in the blockchain world, it is possible to do self-custody of your assets via some softwares that allow you to hold your financial assets without having to rely on an intermediary. This actually even also happened in the traditional financial world with some kind of bearer securities,
right?
Bearer bonds, where you had your.
They're in a safe somewhere.
Yeah, and that's exactly the same thing, right? So self-custody was available in traditional finance, and then it has been replaced by the dematerialization of assets and digitalization of assets, and basically the role of intermediaries that hold the assets on your behalf, right? Well, in the blockchain world, obviously using self-custody softwares makes it much easier to hold assets versus kind of bearer assets in the traditional world. Hence, is something that is widely used in the world. Now, when we talk about third-party custody, basically it means I don't want to use my own software, right? I don't want to be responsible to hold my assets, but I want to appoint somebody else to hold my assets on my behalf. This means that the person, the entity that controls the assets, changes from yourself to the custodian. So the custodian will have full control on your assets, only acting according to your instructions. However, you are still the beneficial owner of the assets. That's where the main difference between the custody that you have on an exchange versus the custody that you have with a custodian such as Hex Trust is. The difference is that when you deposit your assets on an exchange, the beneficial owner of the assets changes. The exchange owns the assets and usually can do a broad range of things with your assets. For example, they can lend them out to other customers to provide margin trading. Well, if you do custody with a custodian, unless you authorize the custodian to do something with your assets, the custodian can only hold your assets and act upon your instructions.
In the crypto world, regulation has been a little bit all over the map on these questions. For example, I think there's been a lot, particularly after FTX, there's a lot of concerns, a lot of understanding about what that meant when you held your assets with a centralized exchange. In a sense, you weren't actually an asset owner, you were actually an unsecured lender to that exchange. And since then, there's been in Hong Kong, where you and I live, there's been a lot of regulation, but not specifically regulation around custody, except to say that with this new class of operators called virtual asset service providers or virtual asset
Trading platforms.
third parties. There are rules that they must provide custody. What does this mean? So if a licensed broker or an exchange, if a licensed exchange or platform, trading platform, is responsible for providing that custody, that doesn't mean you can't also elect to have a third-party custodian, but it does sort of change the incentives around. So where are we with getting regulation in place in jurisdictions such as Hong Kong, as well as Singapore, Dubai, anywhere else that you think is relevant for this conversation, in terms of providing a clarity around issues of custody, and even more maybe deeply into, say, a registrar or some sort of entity where the actual accounting is done in terms of who owns what?
All right, maybe let me take one step back first, right? Let me try to explain why I believe that custody is much more important in the blockchain world than it is in the traditional world, right? In the traditional world, the custodian relies on the CSD underneath to actually have the final record of ownerships of the assets.
Right.
In the blockchain world,
the clearing and settlement.
The depository, right? So where actually the assets are held. In the blockchain world, there's no such thing. There's only the blockchain, right? So the custodian is actually the last intermediary before the actual blockchain, the blockchain network. So which means that if the custodian makes a mistake, right, then the mistake cannot be rewound, right? So the custodian is extremely important, and it's the only piece of the equation of the whole ecosystem that actually has to interact with a new technology, which is the blockchain. All the other financial services on top of custody, they actually look and smell very similar to the traditional services. An exchange in terms of how the book, how the matching engine works, how the trades are recorded, etc., is exactly the same in the traditional world as in the blockchain world. A broker does exactly the same, and asset management would do exactly the same, as well as an advisor, right? But the custodian is very different because it has to interact with the new technology stack, which is the blockchain or a number of blockchains. On top of that, the custodian also enables some functionalities that are not available in the traditional world. For example, the interaction with smart contracts, or for example, the delegation and staking services that don't exist in the traditional world. So custody is critical for the blockchain world. Now, let's go back to Hong Kong, what Hong Kong has done, right? I've been criticizing the way regulations have come about in Hong Kong quite, I would say, openly. But let me be positive today, right? So I think Hong Kong has started by addressing the most relevant pain point of the blockchain industry, right? So the exchanges. Mm-hmm. Why the exchanges? Because the exchanges are actually the platforms that interact with the broad public, with the retail investors. Retail investors go there, exchanges advertise yields, they advertise low trading fees, etc. And they advertise that they have fantastic technology. And then they're the guys that actually take your assets, change the ownership, the beneficial owner of the assets. They lend them out, right? They can front run you, right? They can generate the yield in different ways without being transparent on how they do it, and without being transparent on how much capital they have set aside, right, to pay you back in case you want your money back. And that's kind of the biggest, I would say, pain point that the blockchain industry had probably after the ICO, the ICO era, right? So the SFC went there and said, okay, the exchange platforms are very dangerous. Mm-hmm. interact direct with retail users, let's
Right.
address that point, right? So what they did is that they put in place a very rigorous framework to address the exchange business. And then they realized, all right, but a core part of the exchange business that operates for an exchange that operates in the blockchain world is actually custody. Why? Because you're holding clients' assets, right? And there is nobody that is licensed to do that. But the custody is not an activity that is licensable under the SFC framework. So I think the only way that they could find a solution to license exchanges and at the same time impose requirements for custody was to say, okay, you as an exchange, you also have the responsibility to safekeep clients' assets in a proper way. And they imposed, I would say, very, let's say, competitive requirements for custody compared to other parts of the world. The only thing I would say that could be improved is that the exchanges, according to the framework, they cannot choose a third-party custodian. The only custodian they can use is a wholly owned subsidiary of the same exchange, right, that holds a TCSP license, right? So, which means that every single exchange that gets a license would have to create a custodian entity and run full custodial operations only for the exchange itself. Yeah,
Right.
it's
This is
obviously not
very
efficient or scalable.
yeah. I mean, this is very expensive for the exchanges because obviously they're not in the custody business, which means it's expensive for the customers. But also, it doesn't really deal with the inherent conflicts of interest of when you've got a market operator running and controlling the assets on that marketplace. What are we seeing in other jurisdictions around the region? Are we seeing other approaches that are trying to solve this conundrum?
So, first of all, I think in Hong Kong they will solve this conundrum, right? And eventually they will allow, basically, they will split the two frameworks and they will allow third-party custodians to actually specialize and offer custody services to exchanges. But bear in mind that even in today's regulation, the custody entity has to be segregated from the market's operations of the exchange. In other jurisdictions, the custody framework has been set up quite clearly, I would say. In Singapore, the regulation is quite clear for payment tokens. In Dubai, the regulation is written extremely well and is quite clear and explains very well what are the roles and the responsibilities of a custodian. In Dubai, for example, one piece of modernity in the regulations, the fact that also the staking and delegation activities are clearly explained and detailed, and the regulation basically allows custodian to do staking and delegation of assets on behalf of clients in certain ways, right? Things that do not exist in other regulations, and I think I've put Dubai as one of the leading regulatory framework out there in the world.
Yeah. In Singapore's case, obviously, because they've got a unified regulatory structure, sometimes it can be a little easier to understand what's going on. At the same time, they've put crypto broadly within, as you say, the payment services framework, and that's fine if you're talking about it in a sense of as a tool to say facilitate cross-border payments, but as a capital markets instrument. Something that's being used as in some cases as a security. Is that payments regulation adequate to a full capital markets experience?
I think you raised a very interesting and point that we'll see how it will develop in the future. Basically, at the beginning, the whole regulation has been written for Bitcoin, Ethereum, and similar tokens that were more or less considered commodities or payment tokens all around the world, right? In today's crypto market, it's actually very, very difficult to draw a line between what is a payment token, what is a security, what is a collectible, right? And even more so when these assets interact with smart contracts and they get transformed into something else, right? You can have a stable coin or Ethereum, right, and put it on a compound pool where you lend it out, and you receive on the back of that interaction with the smart contract a receipt of your token, which is basically a tokenized form of a loan, right? Which it is a security.
Yeah.
So that kind of C token is already a security. All the new tokens that we're seeing in the market basically represent units of funds or in treasury bills funds, right?
Yeah.
They give you exposure to the yield. They're all securities, right? It's going to be extremely, extremely hard to draw the line. And I think regulation at this point need to necessarily put the two worlds together already. And if they don't do so, they will have to do it very soon. And basically, there will not be any distinction between the assets of the crypto world and traditional finance. The only distinction will be the technology underneath that is used to support these assets.
One area where we're seeing that blurring happen is in the world of exchange traded funds. So obviously this year kicked off with the United States and more recently Hong Kong authorizing spot ETF, spot Bitcoin and in some cases spot ETH ETFs. So ETFs that track a single asset, which sort of is different than what an ETF was originally created to do. But what does that mean in terms of, I guess, custody issues, safekeeping of these assets? When you've got a traditional, like a BlackRock or Fidelity, that's taking in, some of these are in kind, some of them are not in kind. They vary in terms of whether or not you're, what you're dealing with as the underlying transaction for the units of these ETFs. But how well is the TradFi world adapting to the custody side for these assets? Where do they touch it? Are they outsourcing any of that to players like yourself? What do you see happening?
Well, they have to. They have to outsource to the players like us. And I mean, I think that there was the whole bet that companies like Hex Trust had since the beginning, right? We were interested in seeing kind of traditional money, traditional world money flowing into the blockchain world via new products that could give access to institutional investors to the blockchain world, right? And we were, I mean, the last 6 years, all that we have done was basically to be ready, to be institutional grade enough and compliant to take that money, right? And to basically carry it to the blockchain world to facilitate investments. So I think in today's world, the main blockchain companies, intermediaries, custodians, are very well prepared and equipped to already satisfy the requirements of very sophisticated financial institutions such as BlackRock. And I mean, the success of the ETF, obviously the ETF, the main ETF is in the States, right? So it has to rely on eligible custodians in the States, hence BitGo and Coinbase, custody, etc. But the ones outside of the US, I mean, they will rely on similar entities, but in other jurisdictions, right? So for example, in Hong Kong, we've seen Hashkey and BC Group, right, taking the lead and supporting some of the ETFs. And then we will see other products in other jurisdictions that will rely on other licensed entities. And bear in mind that obviously the custodian is just one piece of the equation, right? There will be the broker, there will be the market maker eventually, right? And eventually these ETFs will be leveraged, maybe, right? And they will provide this. There will be opportunities for other intermediaries within the blockchain world to play a role.
What do you see as the impact on either you as a digital asset custodian or on the TradFi players in terms of this, where in the ETF space with this meeting, how has this begun to change both sides of the industry? Is this leading to different kinds of conversations or different needs or questions between pure digital players such as yourself and perhaps some of the more established traditional custodians that are looking at this? Or this, just trying to get a sense of, now that we've had this sort of meeting of these worlds, where do you see the questions leading us next?
There are probably three aspects. So the first one is really about, it has changed the blockchain world completely in terms of structural demand of the assets, right? So obviously, it's the first kind of opening of the gate of institutional money getting into the space. And this is just the beginning. I mean, we haven't seen any distribution to pension funds, sovereign wealth funds, etc. When that happens, obviously, we will see flow of money that we haven't experienced ever since the beginning of the market. Yeah. So that is the first thing. The second thing is about the legitimization of the industry as a whole. I mean, it might seem like a small point, but it's actually extremely important. Until today, it's still extremely complex for companies like Hex Trust to even have a bank account, right? But obviously now we have banks, intermediaries everywhere selling Bitcoin ETFs to their clients. So it's going to be extremely hard to argue that companies operating in the blockchain world are not legitimate, right? Well, the products that they're selling to their clients are basically assets that are originated by companies like Hex Trust. But lastly, it's really about the conversation, right? So we've seen this huge success. So all the traditional institutions now are still interested again, right? There was I would say, a couple of years hiatus in which they were not probably listening anymore, right? After the crash and after FTX says, okay, we had enough of this market, right? We tried, but we had enough. Now there's interest again, right? There's interest for different things from the web before, or for sometimes the same things, right? But the ETFs are extremely interesting. There was a Goldman conference last week, right? The whole conversation was about tokenization, right? About how to actually bring more traditional assets, not just money market funds, onto the blockchain, and how to make more efficient all the transactions, etc. So banks, asset managers, insurance companies, sovereign wealth funds, regulators are listening again, and the conversations are becoming more interesting because this kind of legitimization of the industry is already decided and concurred by everybody. So basically, banks can talk about it. Yeah.
Right. In the traditional world, a custodian also will often have other parts of the business, which are often the parts that actually make the money for the business. So, I mean, just broad holding, safekeeping of assets in, if it's U.S. equities or bonds, it's 0.0 whatever bips for that service. And they'll make their money usually in global market operations on behalf of the clients, but also, of course, they've got their own products there. So whether it's foreign exchange, securities lending, other services, or they themselves are also asset managers. So if you look at, JP Morgan or State Street or Bank of New York Mellon, all the big, Northern Trust, they all have big investment arms as well. Where do you see what's going on in your business? What are you doing in terms of your version of a global markets business? What does that look like in a crypto space? And where do you see, sort of the revenue growth for companies like Hex Trust?
I think we're going really in the same direction as the traditional financial world, right? So maybe custody is not a business that makes a lot of cash flow, right? But is very capital efficient, right? And it's a very sticky and recurring business. Other activities such as lending, they're obviously very capital intensive, right? And they are determined by market trends, price actions. Other businesses like brokerage, they're very exposed to price action of the assets, etc., trading volumes, etc. So I think this business is basically a banking business that makes sense when you have a diversified business to offer to your clients, right? And hopefully the different business lines are uncorrelated, right, in terms of correlation to the asset price, in terms of correlation of capital requirements, in terms of correlation of kind of the market trends, etc. So it's a game of not offering just one product, but a range of products that our clients want to receive from an intermediary when they open an account. They don't want to open accounts. So I think everybody's more or less playing the same game, and it's similar to the traditional finance. But exactly the same as in traditional finance, everybody has a different core proposition to their clients, right? In our case, we'll always be custody, right? We want to be perceived and we want to offer the best custody services. But then our clients will be able to trade with us. They will be able to hedge their positions. They will be able to stake their assets, and they will be able to access tailored solutions to their needs. Other other intermediaries in the space that will focus their attention on the trading activities, and maybe they will also be able to provide custody as an ancillary service. For us, in terms of revenues, custody is still the largest piece of our business, right? But I would say that especially when the price in the first half of the year with this price action, especially of the new tokens coming to the market, staking has been the business growing at the fastest pace. And obviously trading in the first 3 months when the volumes were quite high, right? For us, it's very important to have a balanced mix of all these businesses to make sure that there's limited correlation, right? And that we can optimize our resources and capital requirements.
What's happening in the DeFi markets? Because obviously, if you're helping clients with staking or on lending their assets, you're deep in the DeFi space. On the one hand, volumes are up this year massively. But on the other hand, when I look at the prices for tokens of leading well-known DeFi protocols, Compound, Aave, Uniswap, whatever, they're all doing very poorly. What is this? It seems to me very strange. What's that disconnect I'm missing? Why? And what does that mean in terms of when you're in those markets for yourself or for your clients? What are you looking to do? Where are you going to be finding opportunities?
I think there's a couple of things, right? So prices of tokens, they depend on business model and flow of money, right? I think for DeFi, business model has to be reassessed, right? So you have these platforms whereby the token of the platform is a governance token, right? So in theory, it should not be linked to the value of the cash flow generated by the platform. It is because then there are buybacks and everything. But in order not to be a security, right, it should only be related to the utility or the governance of the platform. So I think we need to revisit this business model and understand exactly what the tokens actually represent in the case of DeFi to be able to price them properly, right? The second factor is really where the money from investors is going, right, to drive price actions. And unfortunately, right, the money is not going to the application layer. The money is not going where the users would love it to be. All the money is going to the infrastructure, right? We have built this huge infrastructure of hundreds of blockchain protocols, layer ones, layer twos, layer zeros, interoperability, etc. But nobody's focusing on the applications, right? And not to blame anybody, but I mean, obviously, people operating businesses in the crypto space, I mean, they will go when the money is, right? And the sad thing is that the money in the world today is not in the blockchain world today is not generated by user paying fees, but by the money coming from investors, right? So that really, I think, drives the prices of tokens, right? And we've seen obviously a very different price action from the infrastructure layer, layer ones, layer twos, compared to the application layer.
In terms of activities and multiple operations in this space, you yourself personally, not necessarily as Hex Trust, but as Alessio, you've got fingers in a variety of pies. Clearpool for DeFi credit, Synax for DeFi ratings and data, Repo Capital, your hedge fund. How do you kind of govern this, both in terms of just your time since you have to have a senior role in all of these, as well as any conflicts of interest?
Yeah. All right. So in terms of time, I'm a co-founder in Clearpool, and I'm a co-founder in Synax, but there are executive teams kind of running the business. Well, my role is basically more a role of an advisor, right? I don't have much decision-making power in the businesses. And my role is really to spend 1 or 2 hours per week, right, to try to help the team understand where the business is going, right, and to support them in any way that I can with my experience in the market, right. In terms of conflict of interest, of course, as a regulated entity, we have exactly the same conflict of interest processes, compliance processes that you would have in a bank. So I have to declare all my shareholdings in all the other companies, and any transaction that is related to these companies have to be reported and approved, and we have to be fully transparent in this. So I think from that perspective, we already operate as a licensed, traditional licensed financial institution with the same things that you would see in JP Morgan or in many other banks.
Yeah. Okay.
But I think
Yep.
maybe just the blockchain is a market of ecosystem. You need to build ecosystem of things working together, right? The blockchain works because it's programmable, it's interoperable, it's continuous 24/7. People can work together and build on top of each other. So I'm a true believer that you have to build businesses that work together, right? And that's how the original ideas came, right? So Clearpool is a credit market, but where are we going to get the on-chain ratings? Okay, let's build something that will provide real-time on-chain ratings.
Yeah. So what's next? What's sort of the next gap in the market, or where's the next problem that you think you can leverage your experience to tackle?
Well, I mean, we will be launching an asset management business in Hex Trust. That's something that we've been working on for a long time. We're trying to find the angle, but we're basically there. So and it's going to be the main service line that we will propose to the market in the near future. And I think that will be kind of completing the whole platform, custody, DeFi kind of blockchain services, execution and prime services, and asset management, right? So that kind of completes the overall platform for Hex Trust.
And funding, what's the mood music like right now?
I would say we're starting to hear some prelude, some kind of initial sounds at the beginning of the opera. But it's still quite, I would say, quite soft and muted. Interest rates are still high. In terms of Hex Trust, we are well funded, still from Series B. But obviously, eventually, if we want to grow the business, we will need some growth capital. And by the way, we're profitable in the first 6 months of the year. So I think our cash need is less from an operating perspective, but more from a growth perspective, at the same time, acquisition kind of M&A, inorganic kind of growth, which I think is extremely interesting at this stage.
Yeah. What would be your dream acquisition at this point?
Well, we're looking at different things, but if I really need to name 3 verticals that we're looking at, it's basically staking infrastructure, right? Trading and prime infrastructure, and tokenization infrastructure, right? So these are the 3 things that really, I would say, they're very complementary to what we have, and they will give us quite a bit of advantage in the market.
Great. Well, Alessio, it's been great speaking with you. I guess just last question, big hopes. We're speaking now, it's July of 2024. Let's say by the end of the calendar year, what's a metric you hope to have in your pocket?
The metric, the KPI? Oof, the KPI. Well, I would really love to, for us, the main KPI is to work with the biggest players in the industry. So we would really love to onboard another 5 to 10 big blockchain protocols and onto our platform. So complete integration of their wallets, complete integration of staking, and onboarding of their investors, right? So we onboard the big foundation and their ecosystem, the DApps that are building on it, and the investors. So that kind of I think is our main KPI, to onboard new ecosystems and start working with them.
Well, good luck with that, and hopefully sometime next year when we catch up again, you can tell me all about your gigantic book of business.
Fantastic. Thank you so much.
Okay. Thank you so much for joining me on DigFin VOX, Alessio Quaglini.